In the meantime, the air is going out of the housing market even more quickly than at any time in more than a quarter of a century. Diana Olick is watching real estate deflate from Washington, where the latest stunning statistics were released earlier today. And Diana, they were stunning.
They sure were, Aaron. You know, all the real estate gurus talked about a soft landing in the market, a normalization or stabilization, all those familiar buzzwords. But the data out today on prices feels more like a free fall. Prices are coming down across the country at a rate not seen since 1975, with some areas now in the negative for the second quarter of this year. Now, nationwide appreciation is still up, though just over 10% from the second quarter of 2005, but up only 1.17% from the first quarter of 2006. There's your drop off the cliff, folks.
I think people are more cognizant of what's happening in terms of the slowdown, and people are seeing that home prices are falling in many markets, and they're deciding that it's not a good time to buy. Whereas previously thought the housing market was slowing, but prices were still increasing. Now they're deciding that they don't want to own an asset that's falling in value.
All right, so let's go deep into the data. Some states that are still sizzling from last year, at least. Arizona prices up 24%, Florida up 21%, Idaho up 20%, Oregon up 19%, and Hawaii up 18%. But remember, this is year over year. When you look at the quarterly appreciation, these same cities are all around 3% appreciation. Now let's go to the basement, shall we? Sagging states, Michigan and Ohio just up 1% to 2% respectively. Indiana in the same boat, and Massachusetts with Nebraska rounding out the bottom. From the previous quarter, these states are all in the negative, prices going down. Some say this will be the trend for the fall.
I think you're going to start to see a decrease when the next quarter statistics come out. I think it's going to continue into the beginning of 07. And then I think you're going to have a pent-up demand in the second quarter of 07 when the spring market starts. And that's when the number of transactions will start to get back on track and prices will stabilize.
Until then, though, you're going to see some drastic scenarios, like take, for instance, Naples, Florida, which appreciated 135% in the last 5 years, up less than 1% in prices for the quarter. Vegas up 106% over 5 years, up only 0.5% from the last quarter. Fresno, California, up 143% since 2001. Last quarter, up less than 1%. And Aaron, I could go on with some of these.
Those numbers certainly are stunning. Diana, thank you so much. And Diana, giving you the numbers, the housing market certainly in a slump. And the question now is what is going to happen to all of the people who went on a limb with risky mortgages, hoping their new homes would appreciate enough to keep them whole. Certainly we're seeing that. Prices are not rising anymore. Business Week dubbed those mortgages toxic in this week's cover story. I've got the magazine right here. And joining us to talk about how far the poison will spread is Diane Brady. She is the senior writer at Business Week. Diane, thanks for joining us. We've got your story here, Nightmare Mortgages. Have to just start off with, you're focusing here on the option ARMs or adjustable rate mortgages. Why are those the worst of the worst?
Well, it's the logical extension. You know, we had the adjustable rate mortgages, then we had the interest-only mortgages. Now you go further out in the limb, and these option ARMs basically allow people to make minimum payments that don't even cover the interest. And so once they make minimum payments, it's just tacked on to the end. If that goes up 10%, the loan is reset. And sometimes you see monthly payments triple or even go higher. So these are people who generally 80% of them make the minimum payments. And it's just a very dubious, risky type of mortgage because it can come back and whack you in the face, and suddenly you're facing $5,000 a month versus $1,000 plus.
And two frightening facts, because Diana was just going through some of the places where we have seen some of the sharpest fall off in home prices happen to be some of the markets where option ARMs were most popular, Naples, Florida being an example. How many people have these option ARMs, and how big is the billion-dollar problem going to be?
It's a huge problem because even go back as recently as 2003, and less than a percentage point of mortgages basically were option ARMs. The first 5 months of this year, it was closer to at least 12.5%. And when you look at some of those hot markets you were just talking about, it's often more than 50%. These are people who were making a big bet, basically, that prices would continue to rise and they'd be able to duck out of these things before the bill came due.
All right, the bill coming due, Diane, who is going to have to pay it? Is it going to be the borrower, or are we going to have some sort of a fallout here where some of the nation's biggest lenders or hedge funds have a blow up?
I think that that's a real issue. And if you look at some of the biggest lenders, for example, Countrywide, which is the nation's, I think, #1 mortgage lender,
right.
One of the issues there is they've taken these exotic products and people are making the minimum payments. In Countrywide's case, it's 75% or 80%, but yet they book it as full revenue. So investors are also getting the impression that these guys are making a lot more money than they actually are. Countrywide is an issue. Golden West has been an issue, Washington Mutual. So certainly look at those companies and the number of option arms they've been doing. And the hedge funds, yes, they've been picking this stuff up. People don't seem to care as much about the hedge funds because they figure that's a small group of investors.
Right.
But these are $1 billion. I think in Countrywide's case, $26 billion on their books. So it's not small numbers at all.
It certainly is not. Well, we'll keep a very close eye on this one. Diane Brady, thanks so much. And again, it's the option ARMs that she was talking about in particular.